I want to know from you, would you come to a fundraiser cruise with the campaign kits? If cruises are legal and open, assuming that, of course. Let us know. Would you all go?
Oh, yeah.
Yes! Grace? Yeah! Welcome back, everyone, to another episode of the Meet Kevin Report. In this video, we're going to start with the Didi on Didi, and then we're going to get into a bunch of other things that we got to talk about as well, like inflation and Bitcoin and the rotation. That almost rhymed. Anyway, let's get to the Didi on Didi. Ada, take it away.
Go. Didi Xuxing announced its IPO today. The Chinese ride-sharing company that absolutely dominates the ride-sharing market in China, controlling 91% of it with 550 million registered users.
That's nuts! And with that said, we've got some Didi on Didi. Ada, how much did these shares sell for at this company in their last private valuation?
They had a 62 billion fundraising round in August.
In August. Okay, I just saw on the Bloomberg terminal that this company had a valuation in the secondary portion of the private market. So it's kind of like they had a fundraising round for 62 billion. Then now people are trading shares amongst each other for $95 billion. That's a lot. And it got me scratching my head like, how is this the $95 billion company? You've got Uber with a market cap of 92. And, you know, here I am, home bias, thinking, come on, Uber, like, we all know Uber. We don't know Didi. And so I'm like, how could it have a bigger valuation than Uber? And Lyft has a valuation of just $18 billion. But then I started into the Didi a little bit, along with all y'all. And we noticed that in 2019, so before the pandemic, Uber had revenues of $13 billion. Lyft had revenues of $3.6 billion. This year in 2021, if they're lucky, Uber will get to 15.7 bill and 3.1 over at Lyft. Yeah? Well, when you go do the Didi on Didi, they did 6.4 billion in revenue in just the first quarter, which is over 25 billion in revenue for the year if we annualize that, which is nuts because if we jump on over to trying to value a company like this, given that Uber and Lyft are losing money, Uber's not expected to make money until 2023, Lyft's not expected to make money until late 2022, Didi's already making money. We can try to value them using a market cap to revenue ratio, so just kind of dividing their market cap by their revenue. And so Uber trades right now on their 2021 earnings for about 5.9 times. Lyft literally has the same valuation at 5.9 times. Feels like an efficient market. If you go over to Didi, it's only trading at 3.7 times its annualized quarter one revenue. Now, this would be a problem. Well, first of all, this feels very cheap, actually, given all the money they're making and they're profitable. Actually seems really good. The problem is, we don't know if we can just take the first quarter and say traffic for the second, third, and fourth quarter are going to be the same. So that would be additional Didi that would have to be done. But if this were true, and the valuation were about $95 billion with 1.1 billion shares outstanding, this has a share price of about 86 bucks when it comes out. But quite frankly, if those revenues keep cranking, this will easily be over $100 a share.
The company also has 1 billion invested in it by Apple, and Uber has a 12.8% share of it, as well as SoftBank owning 21% of it.
Did Uber shut down all their China stuff?
They did. They actually sold it all to Didi in exchange for 12% of the company.
So they're like, we're gonna sell ourselves to YOLO on your company. That's basically what they did. Okay, great, awesome. What do we got next? So that's Didi. That's interesting. Let us know in the comments down below if you're interested in Didi, or maybe even more of a deep dive on Didi. That's interesting. Did they give a date yet, or just mention that they're planning on listing?
Said July.
July. Okay, so July, and then on an American stock exchange as well. So it'll be cross-listed. Okay,
yeah,
good.
It will be.
Good. So next up, Jonathan, what happened to the S&P today?
The S&P woke up from its slumber today. It hit an all-time high, Kevin, of 42.49. So it was trending in that direction for the past 5 days, and today it actually hit that mark. Small caps, they're retreating from the June leaders, so just another indication that it's going to shift as far as leading the market. Alphabet rose past a new buy point, and it moved very kind of quietly. The volume was below average, and the stock rose less than 1%. It's still too early to write off if Alphabet is a breakout, but it's looking like it might be.
Wow, wait, so who thinks Google's going to break out?
According to the Business Standard, who wrote this article.
The business standard thinks YouTube's going to break out. The only way YouTube and Google are going to break out is if you hit that red subscribe button and turn it gray. Okay, so I also drew this kind of like half smiley face here because it's kind of annoying that the index funds have been doing so damn well and my Tesla's in the toilet. Not bitter at all. See, I'm smiling. Okay, what's up with El Salvador and Bitcoin? What do we got over here?
El Salvador's president approved Bitcoin as legal tender. He was hoping it could help speed up money transfers throughout the country and also that it could boost financial inclusion for the roughly 70% of Salvadorians who don't have bank accounts.
I think countries adopting crypto as their own currency would be really brilliant, especially Bitcoin, because if you think about it, what would you trust more? Like the Zimbabwe dollar the new government has set up, in the last decade, or would you rather Bitcoin? And even though Bitcoin's so volatile, it just seems like it could easily be this like starter currency for countries. What happened to Bitcoin after that announcement?
Bitcoin was up roughly 8%. It's trading at $36,935. And Ethereum also went up about 1% to trade at $2,548.
Yes, almost break even.
On the note of El Salvador, the IMF just released a statement that, quote, the adoption of Bitcoin as legal tender raises a number of macroeconomic, financial, and legal issues that require very careful analysis. So we are following the developments closely and we will be continuing our consultation with authorities. This is the IMF speaking in Washington, and this is because they say that crypto assets can pose significant risks and effective regulatory measures are very important when dealing with them. So in other words, the IMF is really pissed about El Salvador's move, and I have to say, is anyone surprised? Anyway, let's keep going.
Somebody wrote Bitcoin FUD. Who has Bitcoin FUD? Let's hit the FUD. Was that Risk? Jonathan?
Yeah.
Jonathan,
okay,
Bitcoin
right,
FUD.
let's see.
FUD alert, FUD warning, everyone. FUD warning. Chill. Oh wait, the commenters need to have a very clear warning. What you're about to hear is Wall Street FUD. We're making it very clear. The entire video is not FUD. This portion is FUDish, but we're gonna talk about it because we gotta know about it. Okay, Jonathan, hit us with the FUD.
The global regulator puts Bitcoin in the highest risk category in bank capital.
Who the hell is the global regulator?
That's a good question.
Did somebody figure out who the global regulator is? They sound like scam. What else?
I guess this is a proposal. The proposal is open to public comment before it will take effect, and the committee said that the initial policies are likely to change several times as the market evolves.
Wait, so this they put out some kind of proposal, is what you're saying?
That's what it seems like.
And they want to integrate crypto more, but right now they're classifying it as the highest risk asset possible.
That's exactly right. The panel proposed that a 1,250% risk might be applied to the bank's exposure to Bitcoin and other cryptocurrencies.
Wow. I don't even know what to make of that. I mean, what? So how are they? I mean, if you put that much risk in, basically what you're saying is you have to put $1,300 into like an S&P 500 index fund for every dollar. Am I doing that right?
Yeah,
that
well,
sounds right to me.
It says
for every dollar.
in practice, that means that a bank may need to hold $1 in capital for each dollar worth of Bitcoin.
Well, how many dollars?
$1 of capital per dollar of Bitcoin. So I guess USD.
This is 1-to-1 though.
Yeah. But they would have to actually hold it as capital. So I guess that would be.
Oh, just have a cash reserve of
Yeah,
that.
right. Collateral, it seems like.
So someone summarize the FUD for us.
So I wouldn't consider this even FUD because they're creating laws to allow banks to hold crypto. What?
Sorry, I'm sorry.
Oh. Because they're creating laws to allow banks to hold crypto, it's actually helping the Bitcoin price soar because once banks buy into crypto, it's going to be way more official and everyone's going to buy in. There you go.
So tell me more about this risk profile though. So with their percentage, the bottom line that they gave was that a bank should hold $1 of cash for every dollar of crypto that they have. So almost kind of like, okay, we'll toy with this, but we've got $1 to back it up, sort of thing. So basically, it sounds like the Basel Committee is like, okay, well, we're gonna acknowledge that Bitcoin is a thing, but we're gonna go classify it in the group over there with all the junk bonds and the garbage. But even though they're being fuddy about it, it's actually good news because it gives banks this sort of green light that, okay, all right, maybe we should really start considering crypto. And all the old fuddy-duddies can actually finally get with the program. Okay, next up, inflation. We've got W. George, what's up? What's going on with inflation in Canada?
So,
Why do we care about Canada? What do they have to say?
So the pickup in Canadian inflation to above 3% was one of the key issues discussed by policymakers this week. They believe that the inflation will be largely just temporary due to the economy reopening and stuff.
How much did Jerome pay them?
They would not disclose that. But annual inflation in Canada already hit 3.4% in April, and they're expecting it to stay above 3% for the next several months. They are the first central bank of more advanced economies, though, to start shifting away from the bailouts as well. And they expect that there will be further tapering down in July, or on July 14th.
He said taper. The taper is beginning in Canada and it's going to spread to the U.S. like a virus. The taper is coming.
Okay, Otta, you have something on the proportion of inflation?
I do, yeah. Bloomberg estimates 52% of the month-over-month growth came from 6 components: used cars, rental cars, vehicle insurance, lodging, airfares, and food away from home, down slightly from 64% in April. This supports the thesis that the latest impulse is largely due to transitory factors, even as CPI inflation at 5% year over year is the highest since August 2008.
So really, we broke down these numbers a little bit and then kind of spit this up onto the board here. Most of the inflation we're seeing, as Otta said, was transitory, more than half, 52%. And the things that are not transitory, that are actually helping kind of weigh down inflation a little bit, were things like fuel, medical services, car repair, rice, cakes, cookies, pork, instant coffee, laundry equipment, toys, consumer information, and cosmetics. And I believe rent was pretty low on the list as well in terms of how much.
Rent was steady at minus 0.2%.
Minus 0.2% for rent. That's interesting. So these are actually things holding it down a little bit. And these generally deemed to be a little less transitory anyway. Whereas the more transitory inflation things where we're seeing the big numbers, I mean, look at this. We got like negative 0.7. Okay, a big one here, pork, right? Minus 3.6. But airline tickets, we mentioned this earlier today, was up 7%. And cars, used cars, was 12% on car rentals, and used cars, I want to say it was 7.6. It's crazy. So, but these things deemed to be transitory, and the things going down deemed not to be transitory. That's actually good, because when the things that are transitory go away, those increases go away, inflation goes down. These are things that are deemed not transitory, and they're already going down. Those both reiterate potentially lower inflation. Great, now I want to talk quickly about a rotation. I'm always looking for rotation ideas. So if you have ideas on what you think is potentially happening in the stock market, what are we rotating into next? I want to hear from you in the comments. See, we went from healthcare, which saw the first decline, to tech seeing the next decline, consumer discretionary seeing the next decline. This was all like late Jan to Feb right here, right? Then we saw, I'm going to put momentum. We saw this decline. And then recently, we've kind of seen a little bit of a resurgence. We've seen momentum go back up. We've seen, the SPACs kind of start coming back a little bit. We've seen tech maybe a little bit start coming back. EV and energy, like Enphase, though, still kind of flat. So what's next? Where are we heading to next? Or is it going to be momentum again for the rest of June into July? Are we going to go back into tech or EV? Or what about recovery? Because what we're seeing right now a little bit too is a little bit of recovery heading down. So I want to hear from you. Does anybody have opinions on that? Does anybody want to chime in on what you think? Which sector might be next?
He said Tesla.
Tesla's next. Okay, so all in on 2-week call options. Otta's fault. Sue him if he's wrong. Okay, great. Next, Keystone.
So the pipeline's decade-long game of tug-of-war has now ended. TC Energy is pulling the plug after Obama was delaying it, Trump gave it the green light, and then Biden again squashing that down when they already put $1.1 billion on the project. So a lot of union members have had to find new work, and the tourist destinations that South Dakota and the other states that we're going to be into are no longer promising anymore.
Wow, I want to look more into like the Keystone, but lately we've been so interested in California, especially regarding pipelines. One of the things I know is California has no pipelines. You got to truck all the gas through California. It's a big old state, and California has the most expensive gas in the country. So there are always things to balance out here. But I'll tell you, people are leaving California due to expensive gas, housing, and other things. It all adds up, It's taxes, gas, everything. This is why you got to go to meetkevin.com and support Meet Kevin for Governor. And make sure you come to my rally in San Francisco this weekend. It's free. Go to meetkevin.com to sign up. We'll be there Saturday the 12th, and we'll be in Los Angeles on June the 19th, or June 19th. All right, what else? Then we got workers, something about workers. I want to hear about workers. What you got?
The Labor Department's latest JOLTS report posted a record 9.3 million job openings in April. The JOLTS survey has never shown more openings since Labor began keeping track in 2000. Job openings increased 998,000 in April as well. That's the same though.
That's a lot.
That is a lot, yeah.
Yeah, that's, especially with unemployment so high, it's no surprise that a lot of states are like, let's just stop paying the unemployment boost. I think you've got 23, mostly Republican states saying no more unemployment boost just to start getting people to fill these vacancies. I think the big concern, though, is how long is it going to take for people to sort of retool to new skills if the job they used to have is no longer a job that's needed? I really think, and I want to hear from you all, what do you think about this? But I remember at the beginning of the pandemic, we always used to say, as bad as this is for the markets and as bad as it is for the economy, all the corporations are going to just fire a ton of people and then just hire back the best ones. And then everybody else who's left doesn't get a job anymore when things go back to normal. The companies get left more efficient, the people get burned. I don't know, anybody have a comment on that?
Kind of a double-edged sword at that point. Companies get more profits in a way, efficiency-wise, but you also have a lot of people now out of work.
Well, at the moment, they're actually finding it hard to find highly skilled workers in America. And they're considering lots of immigrant options for new visas and stuff. Yeah.
See, that's another thing that's a big problem in the United States is, that skill gap relates. You lose your job, now you lose your skills, now companies can't find skilled workers. But one of the reasons we have such horrible immigration problems in the country is because the legal immigration process is pretty horrible. I mean, companies that need to hire people can't find skilled workers or being constrained because you can only get X number of lottery tickets, essentially, to bring in visaed workers. It's nuts. So anyway, anybody else have anything, or are we done for the Meet Kevin report?
I think that's a wrap for today.
We're done! All right. Thanks so much for watching. Make sure to subscribe. And as always, check out that 40% off coupon code linked down below for the amazing programs on building your wealth and the live streams that are guaranteed through October 31st, 2021 with buy-sell alerts as well in the Stocks and Psychology of Money group. Remember, you could also get the YouTube course, the sales course, the property management course, the real estate investing course, and, well, as I mentioned, the stocks course. If you have any other courses you want me to make, just let me know down in the comments down below. In the meantime, use coupon code I'm Not Leaving to get 40% off.